Hello everybody, welcome to Wrecked City. I might have to change the name of this channel to Wrecked City, at least in the short term. It's got a bit more of a ring to it, to be honest with you anyway. But Wrecked City is what we are right now. So the last video I made, we were talking about how we were pumping up to a very significant level of resistance, this descending trend line coming in from the absolute top, basically marking the top of every one of these pumps since the top, since the peak. And not only that, but the Bollinger Band Centre, in fact, we could see that if we just zoom in a little closer, just to get the absolute tiny nitty-gritty. Well, I mean, it was basically on that perfect trend line, so everybody's looking at that, everybody saw that, everybody either sold or shorted. So the pullback, or should I say the crash or the dump, whatever you want to refer it to, has been pretty significant. We basically started the day closing on the major area of support, roughly about 41,000-ish area, and since then, obviously we all know, coming crashing straight down towards 37.8, 37.7, big dump, big massive dump. So now we're below this area of 40,000, roughly 40,000 being the zone. This descending trend line is still relevant. However, areas of support, well, it's a stab in the dark at this point, really. Well, not exactly. We've got the CME gap, which is it's quite a large gap actually, and it spans between roughly about 32. So we'll get the 32 to about 34, right? Roughly about 34.5 or something along those lines. So that is your CME gap. So the idea being is that it's not always the case, because there's CME gaps that date back to the March crash, and so if you're trying to play every CME gap for what it's worth, I mean, there's a plenty that got missed on this run. You see, the CME futures hadn't been going an enormous amount of time, and in all fairness, a lot of those CME gaps that people refer to that always get filled were in the bear market, and then when the bull market began, obviously they all got filled. But there was a lot of gaps that got created on the way up. So if you're a super massive bear, then yeah, you could look for all those to get filled. But there is one that's sort of teetering just below us ever so slightly, and that is another, at the top of the gap is roughly about 10% from where we are right now, the candle body as it speaks, not the wick. So that does speak to a major area of turnaround. CME gaps, when they used to be in play back in the olden days, back down here, they were a lot more of a thing, really, because the price was fluctuating all the time, and 2019 was a thing. So I thought I'd show you something for those who haven't been in crypto for a large amount of time. I was talking about how crypto going sideways and generally spending a long time going down in what would appear to be what was considered to be, and actually what is and was a bull market. So 2019 started the start of this bull market. We went straight up parabolic. We went absolutely crazy. Everybody went crazy, and it went all the way up to 14,000 and retraced to the grand tune of, we won't measure this bit here, we'll just measure these bits, to the tune of 53% over the space of about a year, really. Within this, we had this it's like a pincer. I think you call them a pizza, but it's like a tweezer triangle, descending triangle, which again is bullish, and you could measure the formation from the mouth of that to the breakout, which was here, and it more or less got a reasonable measured move, I suppose, to where the top actually came to. So we just measure the candle, or we'll measure the tip of that to the tip of here, and it was 2% off. 2% off its low from the breakout, and the breakout itself was 40%. And obviously from the bottom of that would have been a lot larger. We'll leave that there just for fun. But then the old Megatron, the original Megatron, dumped the market, and that's where things really did turn around, because that was an incredible dump that basically got picked up across the board for everything, and then the bull market continued thereafter. It was slow and steady to begin with, to be honest with you. I mean, I say slow and steady. It was pretty aggressive, especially for a lot of altcoins. It was pretty aggressive, but basing this on what we're used to these days, for most people, that probably won't feel too aggressive. If you think about what this was really from the absolute low to its major area of support resistance, so that 220% move, right? It took about 6 months, which is a big move, especially for Bitcoin. But we've been used to that in the past. We've been waiting for the bull market to begin. It began, and we did a much bigger move than that from where it really kicked off, which was around April 1st, a 255% move in a much faster space of time. So things get picked up quite quickly from considerable lows, and things turn around very quickly when sentiment increases back to the bullish. So what we're looking at here is obviously a continuation of the downtrend, being rejected from that major area of resistance that we were talking about yesterday. And even yesterday, you know, I'm not massively bearish on the entire market. I'm very hopeful, and I'm scaling back in at appropriate areas. First area was this wick here. I scaled back in. Probably won't be looking to scale back into Bitcoin until we, you know, maybe get into the CME gap. To be honest with you, if we get there at all. So we can have a look at what we just saw on the 2019 chart, and we can apply something similar, I suppose, over here, which is another one of those pincers, pizzas, tweezers, whatever you want to call them, and we can think about that now as a potential formation that we're in, forgetting about the horizontals, I suppose, and thinking about this in the form of a very steep descending trend that has some kind of relevance to its candle body closures, right? Which would imply further down, most likely, you know, towards the bottom of these areas, about 36, maybe all the way down to the CME area. And let's just say we bounced around here, bounced quite aggressively. We'll just say you know that this is the area that we bounced from. We would be looking for essentially just a bounce, really, to start with, because we can't confirm an uptrend until we've started to make some decent highs. Let's just say that this is the CME area that got bought back up, and then we found a breakout outside of here. We're pushing us up to about 50,000. But even at 50,000, yeah, that's a major area of support and resistance. It's also the top of this cloud, which technically can be used as resistance, and you know, it's all highly speculative. If we look at all the other oscillators that we would normally use, we get an oversold RSI, but it's, you know, in the grand scheme of things, it's not that oversold. And oversold doesn't necessarily mean it can't go lower. Of course it can. So that's your March dump. You know, the old Megatron dump. Prior to that, we were basically bear market, and this is when we dumped 50%. You know, from 6,600 down to 3,300. But it is quite low, let's face it, it's quite low. We have been roughly around this area before, which kind of marked a bottom, so there is that to it. But what we'd really want to see at this stage now is similar to what we saw here. In fact, we'll just zoom into this little piece of price action here. It's not going to turn around immediately. We would want to see a slow and steady build-up of bullish divergence, like what we had here. So lower lows, lower highs, and higher lows and higher highs on the RSI. So the inverse of what you'd see for price action. So we don't have that yet. This could be the building block for that potentially, and we'll go down to the smaller term time frames. We'll start with the 1 hourly, just for a little bit of hopium. So we do have bullish divergence on the 1 hourly. That's nice. So that implies a bounce for the rest of the day. We do have small but actual bullish divergence on the 4 hourly. We're not likely to have it on any other time frames if it looks weak like that. Yeah, we don't even have it on the 3 hourly. So the small term time frames offer up a decent opportunity for a bouncy long from its already existing low. So I wouldn't suggest do it when you've watched this video, because obviously the major problem is that we're in a massive downtrend, huge correction. But it's not isolated to Bitcoin. We've spoken about this quite a few times in the past. This is your Dixie, which is still recovering, but recovering pretty nicely. Reclaimed the area of resistance, which was previous support. And it's probably just going to continue on like we've expected, because there's nothing has changed for the Dixie. The Dixie fundamentals are the same. There's no different to how it is here, to how it was here, to how it was over here or here. It's all exactly the same deal. There's no difference. This is your Nasdaq on the longest term time frame on a weekly. So if we think about what we're seeing here with these weeklies, and again, this is going to go back a long time, there's going to be reasons for some of these big dumps. So if we just measure it from its tip to where it is right now, that's a 12%. Okay, fair enough, 12% pullback there. Let's measure this one. This is a big dump here, and that was a 12%, almost 13%. Okay, no big deal. That was, when was that? Well, that was February 2001, so not that long ago. Another nice correction here, 12%. Okay, fair play to you. And so on and so on. So you kind of get the vibe. This is obviously the March dump, which is bought straight back up. But if we think about what we're seeing here on the chart, anyway, it's 24% dump there. So everything corrects eventually, right? Everything corrects eventually. Now the main question is this chart. Obviously, when people think about bullish charts, I mean, look at the state of this. I mean, this is a bullish chart, isn't it? If you ever saw one, this is the Nasdaq, obviously tech stocks. So, I mean, this just goes back all throughout history, all the way back down to these levels. You know, to talking 70s really, and we're talking about an increase of a ridiculous sum, 16 or 17,000% since the 70s. Obviously, you know, let's calm down a little bit. And throughout of that, it's been through many huge corrections. This is your dot-com bubble here, huge correction. And again, highly speculative reasons for all of that gain, and a big cooling off period is needed. So what we're thinking about here is that as far as this general trajectory, this general structure is concerned, it's not too bad, but there are some subtle changes in this on this time around that we haven't seen in the past. Mostly we're speaking about the Ichimoku cloud. So the trend began here shortly after the March dump, right? So we got a conversion baseline signal on the weekly, a valid one, and now just recently, literally very recently, last week, that trend has now come to an end, right? So that is the end of the Nasdaq's trend that began in well, we can't measure it from the cross, we measure it from the open, which was here, to where we are at from, I suppose, the open of this week. Is a 53% move. So that anyone who played that signal on a weekly, it's time to get out of that trade, particularly, and wait for another one. So even though that this on the Nasdaq is like a standard style, flash correction like we get quite frequently, this one has given us an exit signal based on the chart. So if we go over to the daily, and I know we're talking about Nasdaq here, and I know it's kind of boring. If we think about what we're looking at here on the chart, we're closing below the 200, so we forget so much about the exponential, the white one. Think some more about the yellow one, which is the simple moving average, and we're closing below there. Simple moving averages kind of get it more for traditional markets because they travel slower than crypto. Mind you, we're looking at this exponential and the simple. They basically trend almost exactly together. So there's not a great deal of difference to it, but I'd put more weight on the simple moving average if it ever gets tagged. So now that we're below it, so what we really want to think is where we're going to go from here. What's the next step down? I mean, we've got to think about horizontal resistances, really, if anything, and they are quite far away from where we are right now, unless you're talking about this very moment in time where there was these two peaks over here and a support line over here. So this could be at least a relief rally for Nasdaq, and obviously we're talking about everything blending together. We're talking about the Bitcoin and traditional markets kind of sharing a lot of similarities in the way that they move. Clearly, they always are going to do that, and they do it more and more, especially with all the ETFs that are now coming into play, and everybody else that's investing, institutionals, and even bloody. We're talking about countries taking it on and stuff. So it's getting absorbed into the system more and more every day, and so we're looking at this area now as a potential turnaround for the Nasdaq, and then really what we'll be looking for was to see if we can turn around from here, and this is our 200 simple moving average, which is going to be a lagging indicator. We're going to slowly trail down, provided we stay below it. We're going to see if we can reclaim that, and if we can, then it'll carry on with its multi-year, since forever, continuation of an uptrend. If you get rejected from there, that's a bear market, to be honest, until further notice, because being below all major moving averages on the Nasdaq will be like what we see here for Bitcoin. And again, we're talking smaller term timeframes here with exponentials involved, but you can see here how we've basically got our price action reached its peak, then our orange exponential, our 10 exponential, basically being used as resistance each time. Every time we come down to tag it, it's a resistance. There are moments where we break above it here, but then generally carry on with the same behaviour, getting rejected from it. Tiny little bit of hopium there, but generally every time we come up to it, get rejected from it. So that is how the moving averages will play for the Nasdaq if we can't reclaim this zone. And obviously if we break down below here, then it's going to be pretty hard, pretty heavy. Now if you have a look at the Nasdaq and all the stocks within it, there's some really devastating drops just as of today. This speaks a lot of the uncertainty of the overall market in general, and world events that are playing out, with all the bloody Russia stuff, and then obviously the tapering and inflation being so high, and maybe the Fed having to increase tapering even more, which I don't think they'll do. I think they're going to probably keep it how it is and hope that it works out. But again, all highly speculative fundamentals that go on behind this chart. And because of that, for some people, if not most people these days, big players, big traders, unless you're looking for short scalpy trades, whether that's long or short, which, to be honest with you, it is a tradable market. I mean, if you've got the time and the patience to do it, it is a tradable market. We were talking about this level always being as an area to think about bounces from. We're talking about this level yesterday about a potential area of resistance, and if we were to break out from it for whatever reason, this would probably be the major resistance, and I would be looking for this to come back down to its base level. So, I mean, obviously it came down lower than that, but it's still relatively tradable. But large positions for prolonged entries, whether that's long or short, at this level is neither here nor there. I can't see many shorts getting stacked up at this level and hoping for a great deal more, because we'll be looking for a turnaround point very likely here if we get there. So it's likely to start leveling out for Bitcoin if only the traditional market's leveled out as well. Things will get worse if we break down below here, because then we've got areas that we have to account for which are going to be a much lower, which are going to be areas around here. And again, for Nasdaq, from here to there, we're talking a further 8%. And you can think about Bitcoin as an amplifier for whatever these markets are going to do. So an 8% for the Nasdaq could quite easily be a 30% or so for Bitcoin. So it is a matter of holding your breath and waiting and see what's going to go on in the markets, the general markets. I think overall we are looking for some relief around here for the general markets, unless of course we get something like another black swan event, similar to what we saw in December with the Megatron virus coming out. That caused this. Now if there is some kind of situation, well, I say some kind of situation, if the situation over in the Eastern Europe gets worse, that would be a black swan event. Even though that we can kind of see it and we can speculate to what it will do, if something does happen, shock will kick in the market, and then even then you still have to think about, well, what could happen after then? Just because something happens over there, what's the next step? What kind of escalation can happen after that? Or will it push this down even further, and then what will happen? Will something worse happen over there? Will it continue to go down, and before you know it, it's like all the way down, massively. Basically a stock market full-on crash. But again, we're talking about speculative black swan events here. We're not talking about the chart. The chart suggests a turnaround here to a 200 exponential resistance that could maybe get flipped to support, or could be turned into a downtrend, a full-on downtrend. So I'm going to leave it with you there, guys. But like I say, we sit on the sidelines for the most part. We think about buy orders. First buy order since the major dump. Selling around here. Again, not all out, not all in, but selling around here. My first buy order was here. That's fair play. Next buy order, I suppose, will be just above the CME gap, just in case. And if that breaks, then I probably will wait the whole thing out for a clear bottom. Like a very clear bottom, like I did before the bull market began. I could have speculated on the way down all over here. It was obvious that this was a bubble pop at the time, so it was not worth trying it, to be honest with you. Especially, we'll just zoom in, especially when we see the nature of the rejections taking place and the lower highs taking place. It wasn't worth trying to speculate on a bottom forming here until we reclaim with conviction the 200 exponential and all the others. And so I remember very clearly May the 1st kicked in, it looked positive, go hard and go heavy, wait the whole thing out. But yeah, in this instance the bull market has been different from the outset. There's been more severe breakdown of chart structure each year that goes by, but still continued overall to pick up. And there has been outside forces that have forced this up higher than it should have gone at the time. This was where I was entertaining the possible idea of a bubble pop, but given the way that altcoins looked at the time, it was much more clear that there was going to be a savage reversal from the Bitcoin dominance perspective, which there was, and so we cleaned up basically from what could have been the Bitcoin top into altcoins, and then we started to scale out of those because we made the theory that that the altcoins are going to cause a bubble pop, which is kind of what happened, and they kind of did. This time round, it's been slightly slightly less clear as to what's going on because of all the other outside forces that have taken place, basically tapering, virus, all this sort of nonsense, basically, and now the possibility of like a war. Either way, it is what it is. We still use the chart to the best of our ability, but we keep our ears to the ground for other things which could cause similar things to what we saw over here, which is, again, why we managed to deal with that so well. And so that's what we're going to do. We're going to keep our ear to the ground, and we're going to see this hopefully turn around towards the middle 35,000s. And if that fails, then it is a matter of sitting and waiting for a clear bottom to begin. And that would mean higher highs, higher lows, reclaiming of moving averages, which at the moment are quite high. They're well away from where our price action is right now. So, right, I'm going to leave it with you there, guys. Thanks for watching. Don't worry too much. It's all part of the game. For those who've been with me in this channel, we've been through some savage stuff in the past. We can get through this, whatever it is. It's no big deal. This is the nature of it. But remember that the chart is one component to the price action that's taking place at the moment. There are charts that go beyond Bitcoin, one of them being the Nasdaq and obviously the Dixie. We know the Dixie is going to go up. We know that's going to be harder for anything travelling alongside the Dixie to pick up pace dramatically. So we'll keep an eye on it all and see where we take it. Anyway, thanks for watching. Take it easy.